So hello, we're going to look at different pairs today. This is a series programs, daily forex analysis and forecast. Here's the market heading today. Okay, now on our list, I'll just go straight. I'm going to pick pairs on random. The first pair which we'll be looking at will be Euro USD. Let's analyze Euro USD. Now, in this analysis, we're going to look at some key factors in analysis. We're going to look at the market structure. We're going to use multiple time frame analysis. We are going to look at key levels. We're going to look at price directions so that it will not guide you on how to take the market. Okay, first and foremost, what is market structure? Market structure is just a pattern that price creates on the chart. Simple as that, to determine the behavior of price over time. Now we have different patterns. We have pattern has been created. We have the uptrend, downtrend, and range. These are the three major market structure. Now, we now move on to the multiple time frame analysis. That is analyzing the market from the higher time frame to the lower time frame. Let's just head straight to the higher time frame of Euro USD. If we are to look at this Euro USD, I'll use just Euro USD as a case study in this course, so that with this particular market, done. Okay, good. Let's see if I can still try again. Okay. Okay, good. Okay, fine. Do what I want. Now, let's go down. Okay, so I'll talk about market structure, the pattern that price creates in its directions. Now, this is the pattern that you can see. Is the pattern. Let me just add my this thing annotation so that it's easy for you. Okay, my annotation. Okay, that's all done. Okay, good. Now this is the pattern that has been created. Okay, this is a pattern that has been created. Now, for you to understand it easier, I'll zoom it. I'll just pick two particular markets. To pick two particular markets, and I'll use that to like explain. So, okay, we have, let's say we are looking at this two candle, this red and this green. So I'm going to use the line to okay, good. Now, let's see, between these two candles, is the high, is the low. Now, when this particular candle came up and broke this high of these two candles, and that's okay, it has created higher high. Now let's assume the market breaks it down. All we need to say is that it has created what? A downtrend. I'll just use this pause to like explain what I meant by don't want to make sure I just cleared it on market structure. Market structure. Okay. So let me just use here. Now I take this as I take this. Okay. I take this as my bearish candle. Then I take this particular one as my bullish candle. Okay, let me put it this way. Now, if I should bring these two candles, which can be more than this, you see it. And these two candles, if this particular candle comes and break it to the other side, alright. Comes and break it to the other side, this is what an uptrend, and is creating a pattern more than that. If it should break it to the downside, it's a downtrend. Now, this is not the pattern that this price has created. Now, if it has a series of these more higher high and higher low, is known as market structure, uptrend market structure. And if it has a pattern in which you have more of this going down, that is lower high and lower low, it is now known as a downtrend market structure. Now, the market structure, the key component of market structure is either the swing high in an uptrend, the swing high and swing low, which is higher high and then higher low. So we're going to see all this in the short one. Okay, so now let's look at chart. So now if I may ask, what sort of trend is this in this place? Most people will tell me is what? The downtrend or it's an uptrend. Don't worry, we're going to do it together so that we understand it. You understand it better. Okay, now you take the highest of the market. Here you can see, and then lowest. I'm going to take from here. Let's take from here. Put it in place. Okay, go. So now, I'm going to take from that place. Take from that place. So here I can see which is this place. Now, here look at it. The question I might ask is, what sort of market is this? If your answer is a downtrend, you are correct. Now, we want to know why it's a downtrend. So that's the major issue. Before we take our trade, we need to understand why we are taking the trade. These are now your lower high. These are your swing lows. Series of 8 swing lows. So we've now completed on this. Now from here, I'm going to get the swing high, which is lower high, and swing low, which is lower low. So now I'm going to use circle to do that. and you have this. This is a swing low, but there's something I will explain why. Then this is swing low, and this particular place is swing low. Then here is swing low. Now notice something on this downtrend. You know we said we have three types of market structure: the uptrend market structure, the downtrend market structure, and the sideways market structure. Now this is our downtrend market structure. Now this swing high, which is your lower high, if you notice, this particular one is lower than this, here is lower than this, here is lower than this. So all these ones are valid. This is valid. But we don't really know if this is will come here or not. It's going to beat it or not. We don't really know. So ours is just so this is now. I want to trace it from here. Sorry, trace it from here. You need to really understand this market structure. So trace it from here. Okay, sorry, let me just want to trace it from here. First, trace it from this place. Get now. So there's better that you might not be able to get to this, and this particular swing might not be able to beat here. Okay, so now coming to the swing low, you notice that this particular place is lower than this place. Since this place is lower than this place, what is this place? This place is higher than here. Okay, that takes us to mark here at this place is marked out. This particular place is marked out. It's not valid again. Why? Because it's not following the pattern. So here it's not marked out. Excuse me. Okay, press. Okay, this particular place is not valid. I notice this place and this place. Since this place is not valid, we're now looking at here and here. So this is your lower high and your lower high. Now looking at this place, this particular place is supposed to be lower than here. So as long as it's not higher, which has validated the pattern, the market structure. So here is not valid. Why this particular place is valid? Because it's lower than this place. So if you are now looking at the market structure for the downtrend, you are taking it this way and I'm taking it this way. Okay, let's just put it this way, and from here take it this way. So I've now created what's known as channel. So this is market structure for what? A downtrend, which consists of series of lower high and lower low. So now we want to move on to know the next action. We've been able to identify what the downtrend market structure. So all we need to do now is to now move on to identify the uptrend. Okay, now I don't really want also this already a downtrend, then this is an uptrend. Now how do you now say, why do we say here is an uptrend? You can see the pattern where you have the red and the green is a pattern. So I will now pick it this way. So here is the pattern. It's coming for a downtrend. Please take note of it. This is also a pattern. This is also a pattern. And this is also a pattern. Here also the pattern. Let me just take the all of this as a pattern. Okay. Now, for us to be able to see the uptrend of this market structure, we need to pick the high and the low. This is our high. This is now your high, your high. You have the red, your high, your high. Then the low of it. So these are now your higher high. Then the low of it is here. I will now take this with the trend column and it will become, let's say, green. Okay. Now this is now your low. Your low. I know why I did not mark here, which I will explain later. And this is your low, and this is your low. Also have internal market structure, but this is the market structure up to this place. So when you are considering the uptrend market structure, consists of series of higher high and then higher low. That of a downtrend consists of series of lower high and then lower low. Okay, that's that. Now I want to look at the last type of a market structure, which are patterns that price has built over time to determine its behavior. Okay, good. So now the next thing we need to do is now look at the range. Okay, I'll just pick a few points. Okay, now if you look at this, let me just see here. Please just pay attention here. I'm going to expand that. So let me just use object. Use shape. Okay, I'll be able to expand it. Okay, and this is a range. Why is it a range? I want to explain. Let me just expand it a little bit. Okay, good. Now this is a range. Why is a range? Is because if you look at this particular point, you look at this particular point, this pattern here is lower, coming straight to this lower, then coming straight to this is lower. Now, for you to be able to know if it's a downtrend, this lower high is supposed to give us lower low. Now look at what happened and make it to validate that way. Yeah, if you are compare to this place, compare to this place, and it went up. Yeah, this place did not beat here, and it came down. It's expected to break here for us to know that a downtrend has started, but it didn't repeat that. Now came up, and this up supposed to beat here, didn't. Now came down. This down supposed to continue to be the other side. That did not occur. So because of that, we will now say this is a range. Unlike where we looked at it as an uptrend or a downtrend, you saw a clear swing high and swing low. You saw it. But in the case of range, there's no clear swing high or swing low. So you see a low here, a high here, a different. So that makes this place what? A range. A range market. Now I believe it is now clear what is market structure. What is market structure? Without you getting understanding of this word market structure, it will be very, very difficult for you to be able to understand what to do at a time. But there are times you might be looking at the market. If you don't know the structure of the market at that point in time, you might be buying when the market is selling, and you might be selling when the market is buying. So the knowledge of this market structure will help you to know what is happening in the market. Now, this is a comprehensive analysis. So now, the next thing we need to look at, before we move on to going straight to the multiple time frame analysis, multiple time frame analysis, we need to look at this swing on this downtrend. Now, this is a downtrend. This swing, I want to call, you can call it a retracement, a pullback, or a correction. Retracement, a pullback, or a correction. So when you notice the market is on a downtrend, what you need to look out for, you look out for the what? Correction. This is a correction. The longer the trend candle, which is a candle that is in control, is an impulse. The impulse move at the market. Now I can say the impulse move at the market is this because is this red, because right now this market is on a downtrend. You can see it's on a downtrend. Market is on a downtrend. So the impulse move on this downtrend is the red, which is the longer, which is the one that is in control. I can say, okay, this red is impulse. But now this particular red is simple. Let me change the color right here. I can say, okay, that this red here is the impulse. Why this particular one, or this, let me just bring out all the impulse. This is an impulse. Why the green is now your correction, which is your pullback. So all these are just names that we just decide to like work with. So it all depends on you. Okay, so these are your correction. These are your correction. Now whatever that make the correction to break the channel, that tells you that the change of trend. So in an uptrend, the green is your impulse, while the red is your correction. Hope is clear. So now we've gotten that. We've gotten what is market structure, how it's been built. Market structure are just pattern that the price creates over time. Get now. So and now we have three types. We have the uptrend market structure, downtrend market structure, and the range market structure. We also look at the impulse, which can also be called the continuation in that trend. Then we also look at the correction, which is also known as retracement, pullback. Okay, good. So now we need to head straight to another important thing that we need to understand. Now, in a downtrend market structure, when the trend continues, when the trend is in a continuation phase, for example, this, I'll start from here, the continuation phase, you notice that as the market is moving in a downtrend, it's breaking its low. That break of its low is what we know as break of structure. Break of structure. Break of structure is continuation. Continuation. So, but in academy, we look at it in a different angle, based on our strategy, which is called negative candlestick strategy. So now let's continue. You now notice that this particular move now is not expected of it to do what, to break here, but it did. So this particular place is not valid again. So the valid block is here. So from here now, you have it breaking this place, which is now known as your BOS. So when you broke it, you continue to move on. So I can say I just click here. So right here now, notice that the POS has ended, just like gave us a move back to tell us that the market want to continue or want to reverse, because it took out this pattern here, this pattern, and I said this move, this pullback took out this pattern. So because it took out this pattern, you will make it invalid. This place becomes your solid pattern to take your trade. So take your trade. Now it broke here, which is now your break of structure, came down to this point. Now when the market came down to this particular area, it's expected that based on the market is on a downtrend, the market is a downtrend, so we want to trend the trend because the trend is our friend. But while our anticipation is to trade the trend, that does not mean that the market cannot reverse. It can reverse. So when this happens, when I call this change of character. So if you're trying to like memorize all the terminologies, this change of character can just be referred to as change of the trend. The trend, and then a downtrend, and then an uptrend. So these are what you need to put together when you want to analyze the market. Now we've talked about how to identify your BS, your change of character. Now we've talked about how you know if the market is moving in an uptrend or a downtrend. The next thing we need to do, we cannot just pick any time frame and then conclude that the market is on a downtrend, or the market is on an uptrend, or the market is a range. You need to look at the market from a higher time frame, because from the higher time frame you get to know the general trend of the market before you now narrow it down to a smaller time frame. So this will now lead us to what is called multiple time frame analysis or top-down analysis. Just relax, because I said I'm taking my time to do what? To explain this. Because once we continue with this series of analysis, this is a video in which you always come back to watch, so that once I'm analyzing, you will not be surprised of how we arrived at our entry or at our exit. Okay, good. Let's move on. So now we need to move on with the multiple time frame analysis. The multiple time frame analysis is just moving from the higher time frame to the lower time frame. Now, for every pair or most trading platform have the higher time frame to be the monthly. So in this case now, this MetaTrader 4, we are going to head straight to monthly. This is our month. So from this month now, we're going to look at the bigger picture. So what will be the bigger picture? How will you know the bigger picture? You can see this zoom out. You click on it. You click on it, you get the chart. The chart will be small like this. I'm going to remove this. So once the chart is small, the next thing you have to do, you have to take horizontal line, fix on the highest, and take another one, fix on the lowest, so that you know the bigger picture. Okay, I want to take from here. Here I can see. Yeah, let me see if I'm making a mistake. Okay, good. So now from here, I want to picture what is happening right now. What is happening right now has to do with what? Has to do with, is it an uptrend or a downtrend? You can comment your answer in the comment section, so that I will know that really you are following up the teaching. So right now, in my own case, from the way it's being taught, is an uptrend. Although we still have different way in which you are going to interpret it. And from here, the downtrend, it's a downtrend. But looking at it from here and here, okay, it's an uptrend. Although that's the way it's being interpreted. So now, since you've been able to know if it's an uptrend, so the wave you are looking at now, is it a downtrend? Yes, the wave you are looking at is a downtrend, which is this particular area. This particular area is a lower high. And notice here it's a lower low. So here is a lower high, here is a lower low. You can see the market structure. This place is a lower high. Then here is a lower low. But looking at it now, this place is not valid again. What we need to do, you have to take here. This place is valid. Lower low, and then lower high. So these are your trend. That's just your trend. So here, these are your swing high and your swing low. If I take it again, and I take here. So all these are your swing high and your swing low. Okay. So now the bigger picture is not a downtrend here, because this particular area has been broken. Particular area has been broken. So if this particular area has been broken, that means when the market, I write it down this way. I write it down this way. So that is, we are starting from the higher time frame, which is the month. Okay, good. So using the top down analysis, I just have to write, because I don't want this video to be that too long. So I will just analyze and then watch out for the next thing to do concerning the market. I want to expand it, so I'm now expanding it. Okay, good. So now it's becoming clearer for you. So now looking at this place now, all I need to do, so now come here, fixing sorry, come here, let me take my shape. My first swing is what just after now. This is my swing high, which is my lower high. So why this, please click again. This place becomes a swing low. It's become a swing low. So mind you, we have what an uptrend here inside this general trend, which is a downtrend. Now, at least we've done something, and this expand it so that you should be able to get a better view of the picture. So now this is it. Now you notice something that right here now, you can see the pattern. The pattern that is being created inside that uptrend. Which pattern do I see there? I can see a pattern here. So this pattern is what we are looking at now for this particular market. So if this pattern is what you are looking at, so for you to know what to do. Now, market structure comprises of the buyer and the seller. Now this present candle and the month is a buyer candle, which is a bullish candle. So which tells us that presently the buyer are in charge of this market. Now if I may ask again, within this plot, which kind of market structure are you seeing? Are you seeing a range? Are you seeing an uptrend? Are you seeing a downtrend? Which type of market structure are you seeing? What is your observation right inside the box? Okay, so that I'm giving you assignment, but if your answer is a range, just within here, you are correct. Then if your answer is uptrend and downtrend, please, all you need to do to watch this video. Take your time and watch it again. Okay, now let's move on. So range, this is red. So now move to the lower time frame. Now this is monthly. We are done with proper analysis of the month. So we now move straight to the week. This is a week. Now this is your week. You can see you've been able to get the range. It's becoming clearer for us. You can see now it's a clear range, which is also a market structure. And now combining the market structure and the chart analysis, this place is now still red. So it's now green. The buyer are still in the market. So now you move straight. So if you are going to do an analysis again right there, what we just did in the month, you can do it. All you just need to do, you are not taking it, but what you can see is just from here. This is where you can see now the bigger picture. You've already done it in the monthly time frame. So this is a week. So this is the week, or this this is our weekly time frame. You've seen its range. There are different ways in which you also trade this type of market structure. In a range market, there's a way you trade it in uptrend, there's a way you trade it in a downtrend, there's a way you also trade it. Now let's continue. Okay, good. Sorry, so from here now, go down to what they call it, the daily time frame. This is your daily time frame. Zoom it down. You can see it's your range. Now inside the range, you are seeing internal market structure, which is a smaller structure. Here now you can see an uptrend. I need for me to explain that, but already I've took my time to explain that. So you can see an uptrend. You can see the pattern that is being created. Higher high, higher high, higher high, higher high, higher high, but this is not valid again. And I have higher high here. Then we now have, is it higher low? Okay, so higher low, there's higher low. Here low is not valid because this particular place came down and took it down. Okay, good. So the candle is still what? Still bullish. bullish on the week. It's still bullish. So all we need to do is to now watch out for the market. So now move on straight to alright 4 hour, and this is our 4 hour. Now in the 4 hour, you can look at the market. Let's reduce it, delete. Okay, good. Now we are going to see also market's inner market structure. And if you take it this way, here we agree with me, you and us, okay, that since and the trend is, you can see the pattern here, pattern created, the pattern created, the pattern it created. Okay, so let's move on to 4 hour. The pattern that is being created here, you can see. Okay, so now because I'm not seeing this red, all I need to do is to now fix the line here. Fix the line here. Now if I should look at the trend, what kind of market structure can you see right here now? From here, let me fix my line. Okay, let's assume that to fix, take from here. Take from here. This is where I will now decide to pick. Now, what is your own take on this and this? So what's our own take on this? Is there an uptrend? Is there a downtrend? Is there a range? So just observe the market, then you will now know if it's an uptrend or a downtrend. Good. So this is an uptrend. Why? Here is higher than this place. Here has not been able to prove if it's going to be higher, so came down. So we are not comparing just here and here, and this has really tallied. So we are looking at here and here, higher high, and this place and this place higher low. This place is now, okay, it's still higher, sorry, because if I should use horizontal line, let me use horizontal line so that you can see that it's higher. You can see that it's higher. This place, if you see it, you can see this place is higher than here, so it's still valid. We are now looking at what? I'm looking at the market should be able to break here. So that is the top down analysis. So we stopped at where? We stopped at which time frame? We stopped at 1 hour. So the next thing you need to do is just go straight to your 15 minutes. The essence of you coming to this 15 minutes is one, to reduce your risk, to know where you want to take your trade. Now, to know the behavior of the market, so that to trade with precision, not to trade based on emotion. So now you are going to wait to see if the market can come here. So right now, you can really calculate your risks. So this is our analysis on Euro USD. So on Euro USD, we are looking at an uptrend. On our prediction, is our prediction. Now the market should pull down to this place and then move up, or another key level is come down to this place, then we are looking at it giving us so this is my prediction for what? Euro USD. So daily forex analysis and prediction is a daily analysis. Now if the market gives us the opportunity, we take the trade. But if it does not give us opportunity, we now do what? We wait. We have to be patient to see how the market plays out. Now, for you to really watch how we're going to take the trade. Now, apart from waiting for the market to come to this level, now we need to calculate what we want to raise. This is if we are taking our trade here, this is where you have to put your stop loss. The market should break here, and you see instead of buying, this is where you want to put your stop loss. Now the question is, if the market should get to this place, what are the things I should see that will make me to buy? Now, it's a good question, and I want you to pay attention. I'm going to expand this. We'll expand it. Sorry. Okay, good. And let me expand it. Now you can see the way the market is. When you want to buy, you've drawn your key level. This is your support level. At this particular level, if the market should get to this key level, this support level, and it's red, don't buy. The way it is now, you don't buy. You only buy when it is green. So we don't buy when the candle, let's assume the candle comes close to this place and it's still what? Red. You don't need to do what? Buy. You only buy when it is green. Then you buy, hoping for it to go up. So that's one condition that you need to observe. Then another thing again you need to take into consideration is how much can you risk. Don't just jump into a trade. Calculate your risks before you take the trade. Take your time, calculate the risks. Now if you should break here, this is your next level. So that is that. Now I'm giving you this analysis for free. What you need to do for you to really take time and trade this particular thing, you can do what? You can join my free Telegram channel. The link is in the description below. And in this channel, I just give only setup, which is signals. Now, whatever you need to understand, I have taught you. If you are confused, this particular video will give you a guide to know what I have done, because you will only be seeing screenshots on that in that group, so that you now know what to do. But if you are confused, you watch this video. So you're highly welcome. So now we've talked about how you need to do what? Where you put your stop loss, then you can target 1 to 2 or 1 to 3. So it depends on you. So this is my focus, this is my analysis, this is my prediction for the market movement. So I want you to take your time, go through it. You can also use this method to do what? To analyze any other pair. If you are a beginner, please, all you need to do, you need to practice. Don't just go ahead and go live. Practice. Follow me religiously in the Telegram group, and once you see that your trading on a demo account has improved, then you can do what? Switch to live account. Please like, share, and subscribe to this channel if you find value to this video, because more of this will be coming. God bless you, and bye for now.